I also wanted to talk about deflationary arguments. Like, well, first of all, gas is already coming down for off of July. Um, there's talk about the housing crisis. First, because of more the rates, interest rates increase, and second of all, because of looming QT accelerant. That means again that the Fed is trying to sell off or not no, it's not sell off, but let the its balance sheet run off with maturing. That's basically the equivalent of selling them off. And that's accelerating. I can upload a picture maybe, but this is supposed to happen in September. It's already on pretty far down. I think maybe they're up to like 100 something billion so far out the door. So there's that. QT started. The rates are pretty high already. Not high, but relatively high off the bottom. Now I think it's around like 2.75 maybe. Discover's offering his APY of 2 and they're offering 1.98 annually. That's what I have. There's other banks that have lesser known banks that have like that are competing for like 2 point whatever, 2.6, 2.8 or something like that. So there's that. That's scaring the housing market. But the prices are still very high, but the high prices are pushing rents up because if people don't want to do a mortgage, they're gonna have to stay renting. But when rents go up, it sort of equalizes the field, it levels the playing field. When rents go up, then they have more reason to do the mortgage. So the same old argument of whether you should rent or mortgage. Um, then there's the commodities. Now, commodities have been falling for a long time. Lumber had a peak. I forgot when it was. It came down. It looks. I think it had another peak. Like it went up and down and pretty volatile. Copper, other certain metals, not chip metals. Computer chip minerals have been very expensive because of mining regulations and China's lockdowns. Um, and I'm not going to discuss EV production here. That's a whole another mess. Um, so there's that. I mean, but the thing is, the commodities deflation is not necessarily deflationary on the larger scale. Have you ever heard of Kathy Wood of ARK Investments? She's she's arguing about deflation because of commodity prices and QT that the Fed's being too aggressive. It's laughable, but she has a point in that you cannot ignore you cannot ignore a price that goes down and just say that there's inflation, that there's terrible inflation. We don't know whether inflation has peaked or not. Elon Musk said that inflation probably peaked around July or August, and he might be right. There's a good chance he's right, but again, we don't. I don't know. Maybe some people have a better feeling than I do about where we're holding based off of financial models. Personally, um, I bonds are still probably still a good buy. Again, do not take any of my anything I say here as financial advice. I'm not being liable or responsible for anybody's decisions. Um, but the I bonds are probably going to be even better this coming October, November than they were last April, May. So if you if you're already in, if you can get in before then you can get guaranteed 2 years, guaranteed the first minimal year of good rates. After that, I mean, it'd probably still be above, I don't know, let's say 5 or 6% in coming April, May, but no guarantees. And the stock market might be get better return by that time. It might bottom out even lower. It might be better to go into the stock market if you're thinking about 5 years down the line. That's a tangent. What was I talking about? Inflation, right? So I said I bonds. So no, but I just wanted to I wanted to make a part two to give a more bigger picture of arguments for deflation. So again, so why haven't those commodity prices affected the larger market? I have a theory that it's not necessarily the commodity prices dunking could be just because of the slowdown in production that that they are sort of third in line. That like they are a tier of supply in the supply chain that's behind. If there's a blockage, so then things after it are inflation, things behind it are deflationary. Because if you can't buy it, then the retailer, the consumer can't buy it, so his price goes up. But if the guy making it doesn't buy from the guy growing it or mining it, the guy mining its prices go down. So that's the equilibrium there. It's not equilibrium. It's a matching math. Equilibrium would be when everything comes back to a level playing field. So that is one theory, but I don't know which industries exactly use which materials and all that. So that's not. I'm not saying that's a fact, but that's a good explanation in my opinion. I'm comfortable with that explanation of how there's deflationary factors, while inflation that we can see in CPI and housing prices and gas and stuff is still pretty high. Coming down very little, but as far as we can see, um, a long-term problem in a factor of 6 to 18 months.